Hi everybody, Tim Knight here, November 16, 2010. If you've ever listened to NPR, you're acquainted with those annoying pledge drive kinds of things. I certainly don't want to fall into those shoes, but just wanted to offer a gentle reminder that this is a ad-supported site, so there they are on the right column, just a little hint there, a little reminder. So I'm actually sad to say that I did a dynamite 10-minute recording and my brain decided to sabotage my efforts, and I erased it. Brilliant, huh? So this is the second time doing this. This is take two. Sometimes second takes are better than the first, but some of the wind is out of my sails because I was really cooking on that one. But I think I've still got the right idea in terms of what I want to talk about. I'm going to spend this time looking at mostly 120-day hour bars to talk about what I think is going to happen in terms of the indexes and these long positions I've got. To start off, I'll just say that I entered the day fully short, and I closed the day about 30% long, 70% short. Got rid of my big shorts, IWM and OIH, namely. And I currently have 5 big long positions, which is DBA, that's the commodity one, DRN, which is the triple bullish real estate one, FAS, which is the triple bullish financial one, IWM on the long side this time, and SLV. I don't intend to keep these but for a couple of days, if that. This is strictly for a bounce play. And here is the daily chart of the ES. And this what an amazing million stories are encapsulated in this one little chart. But over the course of spring and summer, as you all know, this inverted head and shoulders formed with a measured target of 1225. It got to 1224.75, so extraordinarily close, and then rolled over. And what I believe is going to happen at this point is that we will make a bit of a push, a recovery to something around maybe 1200 or a little bit below, somewhere around there. Anywhere in this range, thereabouts, would be fine, at which point I intend to get out of these longs. Before I look at the specific long positions, let me go through a few index symbols here. Here's the NDO, and on each of these I'll just talk about approximately where I think it could recover to. Typically, no higher than this level from yesterday. So a couple hundred points I think we've got possibly on the upside on the Dow. The Russell got a nice gap right there. Be very, very clean. Really nice to fill that gap. That would compel me to sell this long and reverse the position. Here we've got GDX. The miners really hit hard today, 3% drop. Again, extraordinarily nice gap up here. A push up to the low 59s would be just ideal. And let's look at one more item, not so much on a minute bar basis, but on a daily basis. This is the closest thing in profit charts we've got to a dollar index. We don't have the DX, the dollar index, but we do have UUP, which is still a helpful guide. And this is the fly in the ointment here, because if this thing hits this neckline and starts heading down, that would be very positive, I think, for the precious metals, but it kind of puts a question mark as to what to do with equities at that point, because a big part of the basis of the weakness has been this big surge in the dollar recently. So definitely something worth keeping an eye on. Let's take a look then at these longs. Before I do, since I'm on a daily chart, let's just take one brief look at something that I'm long, but it's not kind of a straight long. It's sort of a queer one. This is TBT. This is the ultra short on the Treasury. And this one weakens very substantially today. I bought this near the close. It actually has a potential, I think, to go a touch lower, maybe about 50 cents or so. But I really like this pattern. I like this breakout I like the nice increase in volume, and I like just the notion of being short bonds, particularly since QE2 has been such a unmitigated flop so far. And I was heartened to see that Congress is getting involved now, demanding that there's a portion of Congress demanding that the Fed knock it off, which I think would be a pretty good political fight to watch. It's time to get the popcorn and Pepsi out for that one. But anyway, that's my one quasi long position right there. But let's look at these straight up longs that I've got. I mentioned 5 of them. The first one is DBA, that's the Agriculture Fund. And I've got a pretty tight stop on this one over here, just beneath this line, 28.22. Clearly, it could get down to this trend line, so the tight might be stop might be overly tight. But what I'm looking for here, and we'll expand this to see more clearly, is a push. Maybe to this gap, maybe even farther, maybe up to this next gap up here. Not looking for a monstrous move here, maybe anywhere from 75 cents to a little over $1 per share, something around here or so before I get out on this one. FAS, this is the financial one. As high a push as around beneath 25 or so. Looking to get, maybe as much as 10% on this, and that's probably being wildly optimistic. Maybe more like 5%. But again, these are only meant to be held for a day or two. And the other triple one actually did ended the day with a nice little profit on this one because I got it pretty near the low. Is DRN, and what I like about this is that on the medium term, it's quite bearish. It's broken beneath this important horizontal line as well as this trend line. But as far as recovering, I could definitely see it kind of fighting its way back to the low 50s around here. And this tends to move quite fast. As you can see today alone, it dropped over 10%. And so a move upward could be pretty swift. SLV, silver. Among the metals, that's actually held up the best today. Miners were down over 3%. Gold was down. Silver held its own. And it actually closed this gap quite nicely. And so I have hardly ever bought any silver. But this is one time that I did. I thought this was a good opportunity. And the last one here is good old IWM, which on the short side was my best money maker today. This one, I think that the cleanest thing that could happen would be a push back up to this gap, around 71.90, plus or minus a few cents. If it went up to there and just sort of noodled around, I would get rid of my long position and probably reverse it at that point. If we back up here to a daily chart, it's a little fuzzier. On the one hand, we approached that high that we had back in April, didn't quite even get there, and started moving lower. But on the other hand, there's a lot of just noise and support beneath here. It's not exactly at some precipice just waiting to collapse. There's a lot of activity around here, as you can see. But it wouldn't take the most wild-eyed bear to conjecture move down to this lower trend line. Let me adjust this a bit. This has gotten kind of aged. So we can see here this wedge moving higher. I guess the most modest bearish goal would be a move back to that line, which would be a nice move. I mean, that's a good $5 away or so. But as I say, I'm long this right now and would re-enter a short upon closing that gap. So anyway, I wasn't as tepid in my delivery on the last video, but it's a real drag having these things, go bye-bye on you. But anyway, it was a really good day, and hope some of these ideas are helpful to you. And that's going to wrap it up for me. Thanks a lot. Good night, and should be a really interesting rest of the week, particularly with GM. I hear that for every 1,000 shares, you're going to get a free Aztec when it comes out on Thursday, so stay tuned for that. Good night.